Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, August 4th, 2025, we're putting the spotlight on the NZDUSD currency pair, dissecting both the recent news and the raw chart data. Let's kick things off with a look at the current events surrounding the New Zealand dollar and the US dollar. Recent headlines present a conflicting picture for NZDUSD. Some sources like FX Street indicate a prolonged downtrend, with the pair dropping to its lowest levels since mid-May and breaking a critical support at 0.5880. Economies.com also highlights this sharp decline, emphasizing the dominance of a main bearish trend. However, Trading Economics and Reuters report a recent shift, noting that the New Zealand dollar rose above 0.59 on Friday, halting 6 sessions of losses. The current quoted rate is around 0.59106, showing a slight increase in the past 24 hours. This suggests that while the broader sentiment might be bearish, there's been a notable short-term reversal. Now, let's zoom out to the daily chart to understand the broader context and see how these news narratives align with price action. Looking at the one-day time frame, we can observe a clear overall bearish bias over the past several months, evident from the sequence of lower highs and lower lows. Notice the significant, sharp drops we saw around November 8th and November 15th, 2024, and again in mid-January 2025. These extreme one-day percentage changes suggest moments of intense market volatility or significant news events impacting the pair. Despite some intermittent rallies, the general direction has been downward, with previous support levels frequently turning into new resistance zones. The area around 0.60 to 0.61 served as a strong resistance zone during May and June of 2025, as price struggled to break above it on multiple attempts. Looking at recent price action, the 0.5880 level mentioned in the news as a broken critical support is indeed visible as a significant low point in July 2025. The price dipped below it multiple times, confirming the bearish pressure the news reported. However, we can also see the recent bounce, particularly the candle from August 1st, 2025, which closed at 0.5914. Aligning perfectly with the news of the pair rising above 0.59 and halting its previous losses. This suggests a potential short-term bullish divergence from the long-term trend, indicating buyers stepping in at lower price levels. Let's narrow our focus on the daily chart to the most recent price movements, specifically from late July through the beginning of August 2025. As we filter the candles to this range, observe the sharp decline that brought NZDUSD to its recent lows. The consecutive red candles in late July clearly illustrate the prolonging downtrend mentioned by FX Street, pushing the price towards the 0.5880 support. The low around 0.58458 on July 25th was particularly significant, marking a fresh bottom. However, the candle on August 1st stands out with a strong bullish close at 0.5914, reversing the immediate bearish momentum. This solid green candle, following a period of decline, demonstrates buying pressure entering the market and corresponds directly to the news of the pair halting its 6 sessions of losses and rising above 0.59. The question now is whether this bounce has enough momentum to challenge higher resistance levels or if it's merely a temporary correction within a larger downtrend. Now, let's switch to the 1-hour chart to gain a more granular view of the short-term price action, though do note that the latest data available for this time frame is from July 17, 2025. While this isn't the absolute latest, it still provides valuable insight into intraday dynamics during a period of market activity. In the period from July 14th to July 17th, we can see the price oscillating around the 0.597 to 0.592 range, demonstrating significant intraday volatility. Notice the periods of tight consolidation followed by sudden sharp moves, which can present opportunities for scalpers. The inability of the price to sustain moves above 0.598 suggests this was a minor resistance level during that period. Conversely, consistent bounces from around 0.592 indicate short-term support. Volume analysis on this time frame can often give early clues about the strength of a breakout or breakdown. If a key level is approached with increasing volume, it signals conviction behind the move. To pinpoint the very latest movements, let's examine the 15-minute chart, which provides data almost up to the current moment, through August 3rd. Here, we can clearly see the immediate aftermath of the 6 sessions of losses and the subsequent bounce. Observe the downward trajectory from July 29th, around 0.595, extending towards the 0.588 area by July 31st. This micro downtrend confirms the short-term bearish pressure leading up to the Friday rebound. Then, from July 31st into August 1st, we see a distinct reversal, with price climbing back above 0.59 and reaching highs around 0.5928. This rapid recovery on the 15-minute chart underscores the strong buying interest that emerged, validating the news about the halting of losses. For short-term traders, these rapid swings between 0.588 and 0.592 offered significant volatility and potential for quick trades. Pay close attention to candle formations like engulfing patterns or hammers near these minor support and resistance zones for potential entry signals. So, what does this all mean for NZDUSD, and when should you consider trading? Long term, the overall sentiment remains bearish, characterized by lower highs and lower lows on the daily chart. Reasons to be bearish include the consistent inability to break above key resistances and the significant percentage drops seen on certain days, possibly indicating structural weaknesses or strong underlying selling pressure. A sustained break below 0.5880 could open the door for further declines towards the 0.5820 or even 0.5750 levels. Conversely, there are emerging short-term bullish signs. The recent bounce from lows, particularly the strong bullish candle on August 1st, indicates that buyers are defending the 0.5850 to 0.5880 zone. Reasons to be bullish would strengthen if NZDUSD can consolidate above 0.59 and then push past the immediate resistance around 0.5950. A clear break above 0.5980 would indicate a more significant short-term reversal, potentially targeting the 0.6050 level. For trading, always watch for candlestick patterns at key levels, like dojis or hammers at support or shooting stars at resistance. Volume is crucial. High volume on a breakout or breakdown adds credibility. Consider incorporating moving averages or Bollinger Bands to gauge momentum and volatility. Unfortunately, our current data doesn't include these, but they are vital tools. Also, be mindful of upcoming economic data releases from New Zealand and the US, as these can drastically shift sentiment and trigger rapid price movements. To recap, the key price levels to watch for NZDUSD are immediately around 0.5880 as a pivotal support. If this level holds and buying pressure continues, a move towards 0.5950 and potentially 0.5980 is likely, with a 60% likelihood if global risk sentiment improves. However, if 0.5880 fails to hold, the downside target could be 0.5820, with a 50% likelihood if a strong US dollar trend reemerges. Longer term, the resistance at 0.6050 remains a formidable barrier. The likelihood of a sustained bullish reversal beyond 0.6050 is low, perhaps 30%, unless there's a significant shift in monetary policy or economic outlook from New Zealand that strongly favors the Kiwi. Conversely, a continued downtrend, breaking below 0.5820, has a 45% likelihood, especially if global economic growth concerns persist or the US dollar strengthens broadly. Always look for confirming indicators like increased volume on breakouts or breakdowns and divergence in momentum indicators. Keep an eye on any central bank statements or major economic reports expected in the coming days, as these will be key drivers. Thank you for joining Explain the Charts for this detailed analysis of NZDUSD. We hope this helps you navigate the markets confidently. Don't forget to like this video, subscribe to our channel for more insights, and hit the notification bell so you don't miss our next analysis.